So today we have some fantastic news in the UK. Inflation has been beaten. We have beaten the US in the inflation rate and the Eurozone in the inflation rate, which seemed like it wasn't going to happen 12 months ago, but this is really positive news. And today we're going to look at that positive news about the inflation data that's going on at the moment. So I hope you enjoyed the video. Let's get started. Now, first of all, you might have seen the media. Wow. Even with this good news that came out, they somehow find a way to put it into a negative light. I mean, just look at this headline from CNBC. UK inflation comes in hotter than expected, slashing June rate cuts expectations. So that's from the CNBC headlines. Look at this one here. UK inflation falls less than expected, dashing June rate cut hopes. I mean, have we actually just seen how much inflation has just fallen by? Have we not just beaten the US? I mean, a lot of these are US outlets, aren't they? So maybe they're a bit peed off that the UK are beating the US for once here. The only one that kind of came in with an okay headline was BBC. They originally started off with inflation has fallen to the lowest level in almost 3 years. And then eventually they went, let's just change that to UK inflation falls to 2.3%. I just couldn't believe it. I was like, this is such good news. We are beating Eurozone, we're beating the US in this inflation rate. Just take some credit, guys. Like, can we not be happy for once? I mean, look at the UK inflation data. This is such a healthy chart that's been on, just steadily falling away. And obviously, we've fallen from 3.2% down to 2.3%. That's a major fall in inflation. That's nearly a 0.9% fall in 1 month. Now, when you're at 3.2%, to fall that much is very impressive. And obviously 2.3%, I saw no mention of this a few days ago. I looked at the consensus. I started seeing the analyst forecast coming in, and I saw the consensus was 2.1, and I was like, what? How come this is not getting mentioned anywhere? To fall from 3.2% to 2.1%, that is super good. Now, obviously, it did come in a little bit higher at 2.3%, but this is still okay. And actually, if you look at trading economics, they were expecting 2.3%. So for some people, it wasn't actually that higher than what was expected. But this is a major step in the right direction. And you compare this to like the likes of the US, for example. I mean, look at the US chart. The UK has been a nice healthy downtrend on the inflation front. I mean, look at the US chart. They are struggling massively to get their inflation down. They're still in the 3% range, and it's not often we beat the US in something, but we did. And this is something to be celebrated. And I'm so shocked to see some of the media outlets putting a negative spin on this here. Especially when you look at the UK. I mean, if you look at true inflation and the UK inflation data, I mean, we were at like 22% on true inflation at the back end of December 2022. So to get from that, even if we go to about a year ago, if we go to like April time, last in 2023, we were at 16%. So to get from inflation from 16% on a true inflation basis down to the 2.1%, that is really impressive today, guys. And I know a few people go, well, the government will fudge the numbers, and I'm sure there's an angry UK/Russian investor with messy hair that's going to come on and make a video and put in a negative spin on the UK side as he normally does. And I know a few people will point to, well, the government have fudged the numbers a little bit. They cut the fuel duty tax and that helped inflation. I mean, yeah, it's true, but that's just part of the game. There's many other governments out there that are trying their best to also get inflation down. And in other areas, the UK government probably could have done better to get inflation down in the first place. So I would take that with a little bit of pinch of salt, really. And obviously being at 2.3% now is really healthy. Obviously the target is to get to 2%. That is the target. And being at 2.3% is fine. It's very hard to get exactly to that 2% target. 2.3% is a very healthy amount of inflation. And what's happened over the last kind of couple of months is that we've seen a lot of these media articles about inflation, and everybody's got this negative opinion on inflation. Inflation is bad. Inflation is good, guys. Controlled inflation is good. And that's what I think a few people have got mixed up on. If we have inflation of 2% a month, that is a good amount of inflation to have. 2% a year is very good inflation to have. That is supporting wage growth, job growth. It's a sign of a healthy economy. You do want prices to steadily increase. The problem that we had 12 months ago is they didn't steadily increase. All the prices just absolutely skyrocketed, and that hurt the consumer massively, and that's when it becomes a big issue. And that's when inflation is bad. Same as if you have negative inflation, that's also another issue. If you have prices that are going down, that's not going to support job growth, wage increases. That's not a healthy economy. So 2% is Perfect. This is what we want to see. Now, the big thing is, can we have consistency here? We'll see. Obviously, there's a few things like the new living wage that's going to come in April 2024, and that might make it a little bit hard to hold around the 2% range. But at the same time, we've got another price cap coming in, and the price cap will also lead to energy bills falling another 7%, which was one of the big things that, which I think is coming in July, I believe it is. Yeah, it's July it's coming in. So this is going to be another big drop in the inflation point of view. So maybe that levels it out here. And that was one of the big things that has caused inflation. The UK government was so poor at managing the energy situation here. That's why we had the inflation go absolutely sky high, because the UK government didn't manage the inflation situation and the energy situation. So there could be still a few little bumps in the road, but obviously there's still things in the background still coming down as well. Now, the big thing that it comes to now is UK interest rates. I thought we might have jumped a little bit in May. 10 days ago, we saw the Bank of England meet and they decided not to do a rate cut. And obviously they would have had this probably good signs of this data that we were going to hit the 2% range. So I'm really surprised that we didn't see the interest rate cut in May. Now, the next time the UK Bank of England is going to meet is going to be on the 20th June 2024. So we're about 1 month away, and we'll also probably get, I think, maybe one more batch of inflation data in that time frame. So on the 20th of June, I know a lot of these headlines are trying to create fear about rate cuts. I think we are going to see the rate cut on the 20th of June. And obviously that would be really good, because that will be not only UK inflation ahead of the Eurozone and the US is in battle for inflation, we'll also be cutting interest rates ahead of the US, which would be really good. I think we do need to have an interest rate cut in the UK. The reason why is mortgage defaults. Mortgage defaults have gone up a lot in the UK, and we have a little bit of a different mortgage system in the UK where we are more vulnerable to hikes up in interest rates. And so many people have had their mortgage payments gone up a lot. And the expectations, as you can see here, is that mortgage defaults are expected to surge over 22% this year, which is not what we want to see. And the reason why is because the interest rates have gone so high. When you look at the interest rates, for example, we haven't seen interest rates. I mean, this is quite an old set of data. This is from March 2023, and we've gone even a little bit higher than this set of data that's here. But we haven't seen interest rates this high since 2008. We haven't been this high for around about 16 years ago. So we're not used to these higher interest rates, and for it to be done so rapidly as well is really hard for everyone to kind of adapt to that. Obviously, we're never going to have these lower interest rates that we've had for so long, and we should get used to some higher interest rates. It's just that it shouldn't happen this quickly. So it would be very healthy to bring those interest rates down to more towards the 3 to 4% range. That'll be better for the consumers. And the big difference between mortgage rates that we used to have back in 2008 to where we are right now is that house prices were a lot lower. Obviously, when you've got a 5% interest rate on a house worth, let's say, 300,000, to where we used to be in 08, and let's say, your house was probably more worth, 250,000. The interest rate difference on that value is massive on a monthly payment. So the big thing is that, a lot of people should have been a little bit more prepared that we weren't going to have these lower interest rates for ages. But at the same time, okay, we can expect a bit of an increase, maybe 2%, maybe 3%, maybe even 4%. But we shouldn't have mortgage rates overnight go to 6%. Because when that happens, we have all these big defaults happening, and that causes an even bigger issue where we start moving in towards a recession. Now, we don't have a recession at the moment. We were pretty close to one, but we did come out of one in the first quarter. But to avoid a recession, we've got to make sure we manage everyone's income, and having that income squeezed that much by higher mortgages is definitely going to be a major issue. So I don't think we'll ever see maybe interest rates go down to where they were, but we definitely can't go from these levels to where we're at right now. There needs to be some sort of middle ground there, and some slower increase to them sort of levels if we ever do get there. And obviously, if we do lower the interest rates, obviously that's only going to help the economy. The economy's had a bit of a tough time in the last 12 months. I think this would be a really good position for the economy if we were to lower those kind of interest rates at the moment. And the other thing as well is, like, from the Bank of England point of view, let's not forget, when interest rates did started going up, which really was only to the back end of 2022 really. The problem is that when you look at inflation or true inflation, if we do go to the back end of 2022, we already started seeing true inflation at that time frame getting towards the 7% range. So we were very slow having interest rates going up. Now we don't want the Bank of England being slow to bring them down, because the problem is if you don't start bringing them down quick enough, then you start getting the issue where, okay, we're at a healthy amount of inflation, but we don't want to hit deflation. That's what we don't want to hit. We don't want to go from one side to the other side, because if we go to the other side, that then causes problems the other way. And we want to be at a healthy amount. And like I said, for the 2% target, we're nearly pretty much there. It's very hard to get exactly 2% inflation, but also with the price cap situation coming in July, I think we're pretty much there now. And I would say the battle for inflation in the UK is over, and it goes over to the US now. You know, it's very good for the UK to be beating the US at something. So this is really good news for us folks in the UK. And don't let people trick it in thinking inflation's bad. A healthy amount of inflation is very good for the economy. And 2.3%, I think that is just about there now anyway. So yeah, good news. Hope you enjoyed the video, guys. See you in a bit.